Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2025, and we're diving into Spire's fiscal 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Spire, a major player in the natural gas sector, has just released its fiscal 2025 results, and there's a lot to unpack, from their earnings growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Spire reported operating revenues of $2.48 billion for fiscal 2025. How does this compare to last year, and what does it mean for their profitability?
Spire's revenue saw a slight decrease from $2.59 billion in fiscal 2024. However, their net income increased to $271.7 million, up from $250.9 million. This growth in profitability is reflected in their adjusted EPS of $4.44, a 7.5% increase from last year. Additionally, they've raised their dividend by 5.1%, marking 23 consecutive years of growth, which is a strong signal of confidence in their future cash flows.
Segment performance and strategic initiatives. John, can you break down the performance across Spire's different segments?
Absolutely. The gas utility segment reported earnings of $231.4 million, benefiting from new rates despite some offset from lower usage. Midstream earnings surged to $56.3 million, driven by additional storage capacity and new contracts. Marketing also performed well, with earnings of $25.9 million. Strategically, Spire is focusing on the pending acquisition of Piedmont, Tennessee, which is expected to enhance their long-term growth.
Guidance and future outlook. Looking ahead, what guidance has Spire provided for the coming years?
Spire has set an ambitious adjusted EPS guidance of $5.25 to $5.45 for fiscal 2026 and $5.65 to $5.85 for 2027. They also plan to invest $11.2 billion through 2035, supporting a long-term EPS growth target of 5 to 7%. This reflects their confidence in sustaining growth through strategic investments and operational efficiencies.
Fourth quarter performance and market reaction. How did Spire perform in the fourth quarter, and what has been the market's reaction?
In Q4, Spire reported a net loss of $39.8 million, with an adjusted EPS of -$0.47, which was better than the forecasted -$0.46. Despite the seasonal nature of their business leading to a loss, the market has reacted positively, focusing on their strong annual performance and future guidance. The share price has remained stable, reflecting investor confidence.
CEO insights and strategic vision. What insights did Spire's CEO, Scott Doyle, provide regarding their strategic vision?
Scott Doyle emphasized Spire's disciplined approach to growth and operational excellence. He highlighted strategic priorities like the Missouri rate case and the Piedmont acquisition as key drivers for sustainable long-term value. Doyle also stressed the importance of meeting the evolving needs of customers and communities, which is central to their strategy.
Key takeaways. In summary, Spire has delivered a strong fiscal 2025 performance with significant growth in earnings and a positive outlook for the future. Their strategic initiatives and operational efficiencies are setting a solid foundation for continued success. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Spire's impressive results and future prospects.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Spire's performance in the comments below.